Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Jennifer Bisceglie, founder and CEO of Interos, a supply chain risk management company, to discuss challenges in the supply chain and when the bottleneck may ease up. Jennifer, it's great to have you with us. Welcome to Trade Talks.
Great to be here, Jill. Thank you.
And we know the supply chain remains a challenge. We went from COVID constraints to chip shortages to Ukraine and the Shanghai shutdown. And we also know Interos looks deeply at this. What are you seeing today, and what do you expect to see in the coming months?
Well, I think the first thing is just the human aspect of the supply chain really brought it home. So if you think about the 6.5 million people that have been displaced because of the war, as well as just to your point a minute ago, the Shanghai shutdown, they're saying like 400 million people have been impacted. So first is just the absolute human aspect of the supply chain, which I don't think many of us have really considered before. The second thing is that businesses no longer can operate with these types of interruptions. The last 24 months have really brought to light how fragile supply chains are and how connected they are. So understanding real concentration risk, where companies are over-reliant on different parts of the world, like China, is something that's really come to light recently.
What sectors are most exposed? Are some segments of the economy in better shape than others?
You know, I think that we have this concept of the ripple effect in the supply chain. And unfortunately, it's not easy just to simply pinpoint one part of the supply chain. So if you look at the sanctions that are being imposed against Russia, you have everything from the financial sector being impacted to agriculture to textiles. And those things really have, like I said, a ripple effect. The other thing to really understand is when we think about the supply chain and how connected we are, for every 10 suppliers you have, there's a 10 times multiplier behind them. And so it's not easy anymore just to say it's impacting the automotive supply chain or the chip manufacturers. If you think about chips specifically, again, if you think about what's happening in China, you have chips that are used both in automobiles as well as toys and telephones. Telephones, that's old, phones. And so you think about just how interconnected supply chains are, and you can't just say it's one. And you also can't think that it's going to go back to where it was before the pandemic. What's happening right now, Jill, is the new normal. And companies really need to get that transparency in the supply chain so that they can get ahead of that ripple effect and almost pre-solve disruption for the future.
What can companies do at this point, given that there are no easy fixes here?
I think that's exactly it. I think it's investing in technology and investing in transparency, which ultimately builds trust. And it builds trust from a B2B. What we're seeing is that companies are actually being valued in the private sector based on the transparency and trust of continued operations in their supply chain. And then if you also think about the advent of sustainability and ESG, which is a massive topic for the C-suite right now, the ripple effect and that transparency of the supply chain is really important. And that's a global disclosure that is coming out here in the States. It's happening in Germany. And so we're really starting to see companies held accountable for the transparency in their supply chain. So what can they do? Invest in technology that allows them to get that transparency, to map out the supply chain so that again, they can preempt any future disruption or brand and reputational harm.
Is there any light at the end of the tunnel? In other words, a scenario where you can see the supply chain constraints easing up? How does it get better at this point?
The only way to get better is actually to understand what your supply chain looks like. And it's honestly that simple. And so mapping the supply chain and monitoring, you have to know where in the world you're sourcing from and who those companies are sourcing from and connected to. The other thing that's happening right now is we're talking to customers, and over half of them are looking to either localize or hyper localize their supply chain. So what does that mean? They're really starting to invest in that trust and transparency of the supply chain and alternative sourcing. And I think those are the two things. It's mapping and monitoring for that trust and transparency and looking at alternative sources before you need them.
So when you talk to your customers and CEOs, what are they most concerned about?
You know, interesting enough, for the first time in my career, this is actually something that the CEOs are talking about. And so I think that's the first thing, is that they are talking about the supply chain. What are they worried about? They're worried about, can they actually keep earnings where they need to be, what they were reported on? So we saw reports come out from Tesla. We saw reports come out from Apple that they're already looking to reduce their forecast because of the constraints in the supply chain. So they're realizing that the fragility of their supply chain is ultimately tied to earnings, which again is ultimately tied to brand and reputation.
I thought it was interesting that you assessed ESG risk as well. Obviously, it's important for issuers and regulators. Is your analysis of that similar to, let's say, sanctions and geopolitical risk?
You can't separate them anymore, Jill. You really can't. And so you're seeing, again, valuations of companies. They're having to report on 10Ks for public companies. And there's this concept for businesses right now, and definitely for the C-suite, of doing better by doing good, and doing better from an earnings standpoint by doing good by investing in sustainability and ESG in their supply chain. So you saw that Germany put out a law, and Sweden and Norway followed very, very quickly to pull out modern slavery out of their supply chain. And it literally mandates that companies that are doing business in that parts of the world, not just are headquartered, but that are doing business, map out their supply chain for that transparency and trust. You can no longer separate sustainability and ESG from just business continuity.
And finally, Jennifer, can you tell us about the recent partnership with Mastercard?
We are very excited about this partnership with Mastercard. They are an amazing brand, and you can look at the investments that they've put both in from an acquisition in technology to provide that security and trust into the financial supply chain, as well as the partnership with Interos. And so what we're looking to do is work both on the merchant side as well as on the supplier side to help make sure that we, again, we put our money where our mouth is and protect ourselves, and actually ensure we have resiliency in the financial supply chain, which is so important to giving confidence in the markets.
All right, Jennifer, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.